Morning and welcome to the Fractal Effects live stream. Please make sure you read the disclosure. If you're following along with us today, make sure you do a demo account, as this is for educational purposes only. We are not financial advisors and this is not financial advice. Now let's jump onto the charts. So we are very bullish, again with this new tool that we've added to the indicator. You can just take a look in the right corner and you can see that we are green across the board on all time frames. We have a contraction model. London had a bullish confirmation. Since it had an early retracement, had a bullish confirmation, and then a retracement back to the 20 and a short extension. So we're still waiting for confirmation. We have a big New York gap. I'd like to see a confirmation and then a retracement back into that zone. So as soon as we get a bullish confirmation, all of our points of confluence match up. We have a green box. We are green across the board, both on the smaller time frame and the higher time frames. Now we just need bullish confirmation and a retracement. We haven't really had an early retracement. Remember, an early retracement is when we retrace back to the 20 right after range formation but before confirmation. So let's see if we can't get the confirmation first, which is higher probability. Then it allows us to slow things down, watch it come back into the zone, the area of interest. Now there was no news today. Usually when there's no news, there was no news yesterday either, and we had more of a seek and destroy, where price action just kept moving back and forth, taking out liquidity. So usually when there is no news, that is what price likes to do, just take out liquidity. So even though we're green across the board, we do have a bullish confirmation. We have to see all points of confluence match up in order for us to feel comfortable getting into a high probability buy. Otherwise, we could see some erratic price action. You see all these lows here, relative equal lows down here. So we got NAS on the left, US 500 on the right. Moving towards that bullish confirmation. Let's see if it sticks. 15 seconds left. Okay, there's our confirmation. Now we just wait for a retracement back into the zone. I like to see it hit this 20 EMA since it has not. That's currently my fair value gap of interest. Drop down the Fibonacci as well. Around 50%. That'll push us into a discount. So if the market dips down here, might even tap the opening gap, then push up. But we'll see. No, just waiting for that retracement. So the indicator paints out everything for you. The only thing you got to do is extend some of these lines, drop in a Fibonacci. Make sure you're following the rules. Please be sure to watch every single video in the Learning Hub on the back end of Fractal Effects. And then what we do ahead of time is we match this data with the aggregate that's on the back end dashboard of Fractal Effects. We don't do that on YouTube. We will start doing that once we do the live streams on the back end of Fractal Effects. Here we're just familiarizing people with the strategy and our indicator. Now for beginners and people who are new to Fractal Effects, this might look a little noisy to you, but I assure you, every single one of these lines is a area of interest. And we go over everything in the Learning Hub, so you're familiarized with this. You can learn everything literally on a weekend if you have the time. And then practice for at least 30 days, we recommend, in a demo account. Familiarize yourself with high probability setups. Feel comfortable taking those high probability setups. And then you're on your own. But we will continue to do live streams. We'll probably even increase it from Monday to Friday once we move everything to the back end. And then we'll most likely use Saturdays, either Saturday or Sunday, to just kind of do a recap of the week. And we'll probably do that on YouTube. So we have our confirmation, just waiting for retracement back to the 20. And so far, this is our fair value gap of interest. Now, as we teach, every day has a specific footprint. We also want to match that footprint to our daily bias. We do also have last week's weekly range. Today we're forming the new weekly range, but here's last week's. We could see some reaction off this. It could just actually bounce off that and head down, so we want to be very careful. Now with the higher time frame table here, you can easily just look into the right corner. You'll assess that, hey, we are bullish on the higher time frame, 4-hour daily, and you just want to match the 1, the 5, and the 15. You want to make sure they're going in the same direction as the higher time frame trend. If you ever choose to take a counter trend trade, because you see all the confluence, say you saw a downside expansion model, you had a red box, you had a bearish confirmation, but you saw that the daily and the 4-hour were green. Remember, we have a daily bias and then we have a session bias. The daily bias is green. Ideally, for high probability setups, we want to make sure the 1, the 5, and the 15 match. But if you have all those other points of confluence and the 1, the 5, and the 15 are red, then you should feel comfortable taking a counter trend trade. But all the other points of confluence have to match first. So now the EMAs are actually part of the indicator itself. You can turn it on and off under the settings, but it's part of our strategy. You can change the colors if you'd like. So still continuing to push up. Now we've hit the weekly range. We're going to get some reaction here. So there are people that use this fair value gap and take this for the long, but we want to see more confluence. We want to see it come at least deeper, touch that 20. So everything is bullish across the board here. But because it's Tuesday and there is no news, we've already swept liquidity up here. We want to be careful that this is not just a liquidity run and then a drop. That's why we wait for reaction down here. Otherwise, it could just cut through. Remember to move up your Fibonacci. Make sure you always know where premium and discount is. The 50%, 50 to 61% now moved into our fair value gap of interest. So we're getting reaction off the weekly range, the aqua line there. Still waiting for retracement. Now our 20 EMA has left that fair value gap of interest. The next fair value gap is right here, which the market has already used. Just lightly tapped it there with this candle. But again, we want to see more confluence. We want to see that red candle tapped, that red EMA tapped. Otherwise, it's just trying to catch a runaway train. Always wait for the market to come to where you are, where you need it to be. For example, if it comes down here and taps, or if the EMA meets us here, and then we get that tap, then we know where to place our stop loss. It's down here. If you just jump in, you don't always know exactly where your stop loss is going to be. This helps us frame our trade setup. Again, NAS on the left, US 500 on the right. About 13 minutes away from 11 o'clock. Now, if we get to one standard deviation before we get that retracement, there's a high chance that it could just drop right through. So this is our low-hanging fruit right now, 1. If we had gotten a retracement, I would have looked more for 1 to 1.2. If it taps a 1, and then we get that pullback, could actually just keep dropping. Ideally, we don't want to see it go all the way up here. US 500 yet to tap that weekly range. Take out those highs. Remember, there's highs and lows behind these weekly ranges. down here and up here. So NAS has already taken these highs from last week. US 500 has not. So again, we're just patiently waiting. We want to see the price move back. Tap our 20 EMA. Remember, the indicator paints out everything for you. We know exactly how high we want to go and even how deep we want to retrace. When you check out the aggregate on the back end on the dashboard of Fractal Effects, these are in the range standard deviations. And up until now, we haven't been using those just because I've been trying to get people familiarized with the actual indicator and the strategy. But on the back end, it gives you 20 years of aggregate and lets you know what this algorithm has done over the last 20 years for every single, even if you want to filter it down to the day every Tuesday during the New York session, how deep it's retraced, how many standard deviations it's retraced into the range before getting that extension. Still just patiently waiting. Sorry, just noticing some technical difficulties with YouTube here. Stream might have slowed down there for a second. Again, still waiting. We're at 0.5 standard deviation, gesticulating here. We want to see that drop. We want to come back at least to this zone. Might even want to sweep these lows and tap this fair value gap and go up. About 7 minutes to 11. Just waiting for a retracement. And this is how slow and patient you should be. Once you get that confirmation and everything else is kind of matching up with your bias, then take your time. Wait for those retracements. And as mentioned before, if it takes off without us, that's fine as well. I'm not trying to catch a speeding train here. But we've had a pretty big extension without a decent retracement. This is still the area of interest. Our goal is to be in a high probability trade setup 1 hour after the range formation. So around 11:30. And be out of there before noon. So when you do this right, you're only watching the market for about an hour, hour and a half, and you're out, done for the day. And if you can't trade the New York session, there's the Asia session, the afternoon. There's the London session, that's overnight. Whichever one falls into your time zone or your free time in general. And at the beginning, you're just looking for one successful trade setup per week with the right risk to reward, 1 to 3, and aiming for about 12% a month. That's the goal. But you got to make sure that the trade setup is high probability. And that's what we teach you, to look for those high probability trade setups. Still just patiently waiting for that retracement. We're not going to make a move until we see that retracement. Market slowly pushing down now. Three minutes from 11. We have taken out previous day's highs. I was hoping to actually run up into that after confirmation. So now that there's a higher probability, the market could actually go down, or at least much further, and do a deeper retracement. So now that it's taken those previous day's highs, it's seeking more liquidity. It should come down at least to here. Maybe even closer to the 50. But let's see if it comes down here before 11:30. About 2 minutes till 11. Still just at 0.5 standard deviations. Market stalled here. Let's see if it pushes down now. Got a relatively big fair value gap here. So they're engineering new liquidity, people going long here, people going short from this wick off the previous day's high. But we're not looking for any sell setup. And we have to wait for it to actually come into our zone to give us a buy setup. So this is all going to protect you now going forward. If you just look up here, none of these things match any kind of a counter trend, high probability counter trend trade. You don't even look for that setup. You just wait patiently for the buy, nothing else. If it comes, it comes. If not, that's okay. About 29 minutes left. Let's see if we can't find that trade setup. Still stuck there. Right at 0.5 standard deviations. But again, if we hit one standard deviation before it comes back down, then we will most likely conclude the session. That's our low-hanging fruit. So we want to see it tap in here so we even have enough room for growth. Always be sure to check to see if that there even is a 1-to-3 risk to reward ratio. Just kind of giving a general outlook here. We want to see what actually happens in this zone first, how far it retraces, or if it even comes back for that retrace. Still just patiently waiting. About 26 minutes left in our stream. Quick in and out. That's what we're looking for. So either we get that retracement, and we look for that setup, or it taps a 1 standard deviation and the juice has been squeezed. Still bullish across all time frames. But as mentioned before, we have taken out previous day's highs with this wick. So this would be a good area for it to pull back for the retracement, but since we've taken out previous day's highs, it could also just head all the way down to take out previous day's lows. For people that are messaging us asking about the indicator, keep in mind, guys, the indicator is part of the package. So as soon as you sign up, we send you an invite-only message. And you accept that, and then you have access to the indicator. And it works in conjunction with the 20 years of back-tested data. It's on the dashboard of Fractal Effects, on the Spotlight dashboard. "23 minutes left. Still no retracement yet. Just caught between our entry and our TP right here. And the closer we get to noon, that's when our probabilities decrease. Different algorithm takes over the markets around noon, more chaotic. It's usually just a big reversal. Still just gesticulating. Right at 0.5 standard deviations, just a little bit above the weekly range. Remember, NAS took the weekly highs out, whereas US 500 has not yet. That divergence. Our 20 EMA now officially inside that fair value gap of interest. While the 50 and the 61%, the golden zone, is down here. So we could actually get a deeper retracement past the 20 tap here. I want to see the candle body close above the 20 though. That'll let us know that we're officially ready to head back up. And this is how we use these zones to make sure we're safe, because once it comes up here and it taps the 1 standard deviation, as mentioned before, the juice has been squeezed. That's our low-hanging fruit. That's what we're looking to get to. So if it gets there first without the retracement, we're done for the day. But if it just keeps retracing and retracing, and we don't see that reversal, we don't see those wicks, we don't see our high probability trade set up on smaller time frames, then it could just keep dropping all the way through. Take out these lows. Remember, the market hates straight lines. It's jagged up here, straight down here. Could just come down and sweep all this. Slowly starting to get some kind of a push here. Let's see if it happens in the next 20 minutes. Then how far? Slowly pushing down now towards that 20 EMA. So this is our fair value gap of interest right now. 20 EMA sitting right in there. We have about 17 minutes to find this high probability setup, otherwise we're done for the day. US 500, pushing down further, closer to the 20 EMA, top range. So if this pushes, it might use the top of the range, the bottom of this fair value gap, and the 20 EMA to push. Really taking its time, kind of coming down here. Again, until we get closer to that 20 EMA, I'm not interested. Otherwise, there's not even enough room here for us to get our 1 to 3 Bristol reward. Aiming for 3R. Slowly making its move now. Slowly getting there. The bottom of this fair value gap now. About 13 minutes left in our stream. On a smaller time frame, we're up against an EMA here. Sure, we're going to bounce off that, head down. The only question is how far. And there are a lot of people that take sometimes a short counter trend. As mentioned before, you're just gambling then. Right now, there's nothing here that shows, even if this thing falls all the way through and we were wrong, nothing here shows that we should be in a short. We're only waiting to see a proper long setup. And we're interested closer down here. If it happens within the time frame that we've set out in our rules. Still trying to get down to that EMA. It's a little over 10 minutes left in our stream. Let's see if we can get here. There's a reason why we've set that time restriction. The longer it takes to get down here, as mentioned before, it could just cut through. These are called fair value gaps for a reason. As soon as the market returns back to them, fair value has been delivered. It should not have to sit there for longer than a couple of candles before it takes off. That is just signs of manipulation and or a reversal. And if a reversal came, as mentioned before, there is nothing that shows that we should be taking a short here. Have 10 minutes left. Even if you miss it, or you have 3 days, you have 5 days in general, but with us, you have 3 days. We're just looking for one trade setup across the whole week. Once you've mastered the strategy, you have access to the indicator. You can trade this even into Saturday. Bitcoin actually follows the rules. Saturday morning session, New York session, we've back tested that, and it's usually pretty clean. It's the afternoon and the Sunday sessions for Bitcoin that get a little weird. It's because less people are trading, so they have more manipulation, trying to bring more people in. And even though we only look at NAS, usually the indices in the morning, and or oil, you can trade anything. Commodities, precious metals, Forex. This market pushing up, even though we have not hit our 20 EMA. This is the only place we'd be interested. Now our 20 EMA has already gone past our fair value gap of interest, and we're moving slowly towards this fair value gap that's already been delivered to many times. But until we have that tap, and until we have a setup, high probability setup on a lower time frame, we're not interested. And again, this thing could take off without us, that's fine. We're trying to get the best possible entry. Remember, the market is designed to catch you, to trap you. It's a very elegant algorithm. It's psychology and it's reverse psychology working at the exact same time. So it's not a matter of whether or not you're going to lose a trade. The better way of looking at it is, what's the probability that you're going to get into a successful trade? That's the only thing. You're always going to lose. There's going to be times where you lose, but if we wait for the highest probability setups, then we know exactly where our stop loss is, and it's a tight stop loss. Then even when we do lose, we don't lose that much. Risking $1 to make 3. As mentioned before, there are people that jumped in here. They went long off of this fair value gap. Now they're sitting in negative. Still waiting for our 20 EMA to be tapped. I'd like to see it touch this fair value gap. Even a wick as low as 50. And then a body close here. Then this fair value gap. Then we'll actually start looking. Until then, we're not interested. This is extremely bullish. So if we don't get a proper pullback retracement, this thing could take off at any time. About 5 minutes left in our stream. Hopefully we're able to catch that. Remember, our goal is to find the high probability trade setup before 11:30. But if you find it and you're in it, you can ride it all the way up till 9 o'clock. Or sorry, 12 o'clock. My apologies. Noon is when we want to get out, New York time. So it's working its way down, closer to our 20 EMA. Let's just hope it happens in our allotted time. Three minutes left in this candle. A little over 3 minutes left in general. Please make sure you check us out on fractaleffects.com, where we teach high algorithmic, high probability trading. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. Currently we are live Tuesday, Wednesdays, and Thursdays, starting at 10:30. A little over 2 minutes left. This could just be one of those days where the market just stays in that zone. Stays in that zone probably closer to noon, and then finally maybe just drops all the way through, and we get a reversal. We don't like to see this much gesticulation, this much consolidation after confirmation. The 20 EMA was pretty far down there, so it waited for it to come all the way up. But we're not interested here. We're interested down here. Market's still just gesticulating. People going short from here. Other people going long from here, still just engineering new liquidity. That's why we wait for these points of confluence, because it's playing both sides. There's people going short here. People going long here. See what I mean? Anybody who tries to tell you this is all just buying and selling pressure, come on, it doesn't look like that. This is an algorithm, and it follows specific rules. That's our time. We were hoping to get down to that 20 EMA, but I think it's going to be one of those days. And that's mostly because there's no news drivers today. So it's really just taking out liquidity. First it created these candles where people went long, took out that liquidity. Now I think it probably wants to take out this liquidity if it wants to drop, or it'll push down, maybe even take out this liquidity before it heads back up. Either way, we're not going to wait around for it. Thanks for joining us. We'll be live again tomorrow.